Yo, what's going on, everybody? So today we had another case of the monetarist zombie panic selling. Actually, the market was trying to recover most of the day off of that hotter than expected PPI number this morning. Before I go on, let me just say one thing. Some asshole is coming on my channel, posting up comments telling people to call them at call him or whoever this idiot is, and saying contact me on WhatsApp. Okay, I don't, if somebody's doing that, and I blocked this guy and I reported him to YouTube, but if you see anyone posing as me in the comments and telling you to contact them on WhatsApp, I mean, just stay away. Stay away. Some fucking asshole doing this, and it is a fake account. And hopefully we get rid of this guy. I blocked him. I reported him to YouTube. So do not respond to anyone saying posing as me, because I don't get out my phone number on these comment sections. So just wanted to bring that to your attention. So yeah, today we had a hot PPI. Look, as far as the inflation, I said this from day one, going back a year ago. I said that when the Fed starts raising rates, it has the opposite effect on inflation than what their orthodoxy thinks it does. I mean, it just raises the general price level. And while we have seen some improvement in inflation, because some of these COVID related issues, supply chain issues and things like that, they're starting to abate and then come back to a certain type of normalcy. The fact that the Fed keeps raising interest rates and other central banks keep raising interest rates, look, I'll say it again, I've said this a million times. The cost of credit is reflected in the cost of all goods and services. If you raise the cost of credit, in other words, the interest rate, you are raising the general price level. If you want one example there's a bunch of examples. First, I'll point out, as I have in the past, you look at Japan, the only central bank which has not, changed its rate. Really, it's still like at zero. It might even be negative a tenth of a percent. Inflation is like non-existent over there, and they're totally reliant on imported oil, okay? And if you look at countries like, and I've used these examples in the past, if you look at countries like Turkey and Argentina that keep raising the rates, what happens? The inflation rate keeps going up. So the Fed is really hindering the ability of the economy to adjust to, a less inflated price level, just because they keep raising interest rates. And again, this is pure central bank orthodoxy. I said this was going to happen. This is like MMT 101. I mean, MMT explains this. What happened today, at the end of the day, there was a comment made by one of these Fed officials saying, hey, maybe a 50 basis point rate hike isn't such a bad idea after all. Like right now, the market was pricing in 25. But look, folks, let's move on to a separate issue, which is also rate related. And that issue is massive interest income transfers. Now, I've been talking for months. I said February 15th, we were going to get the quarterly interest payment, and I said that would be the peak in the fiscal flows, and we're going to have some turbulence. I said I've been telling you this for months, because now we're going to come into the tax train period of March and April. It was unbelievable. First of all, yesterday's interest payment was like 51 billion. That's 10%, that's 5 billion, or like 10% higher than, really more than 10%, a little bit more than 10% higher than the last quarterly interest payment in November of 2022. All right? And again, the interest on Treasury securities, like we're not even a year into the Fed's rate hikes, right? They started in March 2022. So like a lot of stuff, I keep repeating this, a lot of these maturities, these issues haven't matured yet. And when they do, and then they get reissued with the higher coupon, I mean, this thing is just gonna, the interest flows are just going to be blowing through the roof. I mean, it's just going to be something that is like amazing. This is like a whole entire new COVID stimulus. And again, it's just ramping up. So, look, today's action was, again, zombie panic, monetarist zombie panic. You see how embedded it is. But I was kind of optimistic today because the market did look like it wanted to recover off of that number. But then when we got that comment, it came down. But in any case, I did tell you that we are entering this period now where March, April, tends to be kind of a negative period because we get the tax strains. But I also said that it's going to be interesting to see this year, because now we're seeing these very significant interest income transfers, that could offset or that could mitigate the negative, seasonality that we're in here right now. Let me mention one other thing. Tomorrow I am leaving for my wilderness survival training course. I'm heading out to Granite Falls, Washington State. And I'll be there. I get there like tomorrow, and then on Saturday and Sunday, I'm going to be in the course, and then I'm returning back to New York City on Monday. And Monday, I think, is President's Day, so the stock market's closed. But should be a very interesting experience. I never did anything like that before. It's going to be cold. It'll probably be kind of wet and rainy. The only thing I'm bringing really is a tarp. Sleeping bag, obviously, and a little tiny camping stove, just a little thing that hooks up to a propane burner, and one of those, what's that stick called? The lighter kind of thing. I forget what they call that thing. He gave us a list of stuff that I needed to bring, so flashlights, stuff like that. So it should be very interesting. Maybe I'll be able to record some of it and put it up here on a video. So I'm kind of still getting my packing together for tomorrow. And so that's the update for today. See everybody maybe tomorrow. Bye.